Okay, well, with a country with a housing deficit of over 60 million, there are huge opportunities for mortgage banks. Also, we are aware that there's a new guideline recently released by regulatory authorities, by central bank, on operational guidelines for mortgage banks effective from next year. There's a new requirement for capital requirement, and there are new operational guidelines to in which areas mortgage banks can play. Briefly, we will certainly be playing along these lines, in line with the new regulatory guidelines. We expect that for Intercontinental Homes, just like for majority of operators in the industry, this will be largely a transition year. Transition year because there are certain activities which mortgage banks may not be able to partake in from next year, particularly real estate activities. And of course, they need to transition from being active in real estate to being only active in mortgage banking. Also, we're also aware there are also some restricted activities. Mortgage banks also have to wind down on retail banking and consumer banking, which are not allowed in the new guidelines. So certainly, what it will bring in is to ensure that mortgage banks focus more on mortgage banking. It's only when they focus more on mortgage banking that they can make Nigerians realize their dream of home ownership. As I said, with 60 million housing gap deficit, there is a lot mortgage banks can do in this regard. Intercontinental Homes will not be different from this. We are retooling, we are rekitting to ensure we can play our role effectively. And also on the issue of recapitalization, because as I said, there are now two areas now. You have mortgage banks who can play with a national franchise of 5 billion, and you have those who are limited to the state with 2.5 billion. For Intercontinental Homes, the direction is clear for us. With a 4.5 billion shareholders funds, it only means the only logical approach is for us to make up to 5 billion. And there are ways we can look at this. I'm sure we are working on all of this. Part of this includes it can either make up this recapitalization additional, either through from profit from operations from this year. We can also decide to do it through maybe a combination with another mortgage bank. The board and the shareholders may also agree to a rights issue. Or there are a lot of opportunities. It can either be a play of any of these. These are ways where we are going to meet this capital. And in terms of activities, we are going to focus more on mortgage banking, which is the main focus of mortgage banks. Thank you.
Right. We understand that there's been some housing fund, some kind of housing bailout fund by the CBN. How accessible has this been to you mortgage bank institutions?
Well, I must say that I'm not aware of any bailout fund from the central bank. I know there have been discussions in terms of intervention funds for that industry, like it was done for manufacturing. But I'm not sure there is any agreement on this. The regulatory authorities have not come out with any decision on this. What I'm aware of is the effort by UMBAN, Mortgage Bank Association of Nigeria, in liaising with CBN, with strong support from Central Bank, in setting up what we call a mortgage facility liquidity company. That would, to a large extent, ensure that mortgage banks remain liquid. In other words, you can refinance your otherwise illiquid assets, because mortgage assets are illiquid in nature. You are giving loans to people for 10, 15 years. That will aid liquidity, but not intervention funds. Thank you.
All right. Away from that, just one more now. A lot of investors have divested from equities and stocks into real estate sector. Now, there's a whole lot of investment in the real estate right about now. How would you describe real estate with, in terms of relationship with investors right now? Is there going to be some kind of bubble asset experience as well?
Well, I think what has happened the last 3 years, it's what I would call a correction in the real estate market. It has happened all over the world, the global market as well. And Nigeria is no exception. We are part of the global village. We know that the activities in that area, as initially it was up, but there have been increased pace of activities in real estate in Lagos and in Abuja, in other areas as well. We believe that this will be further enhanced by the time the mortgage banks are able to play their rightful role by financing our home ownership. And we feel that right now there is no risk of a bubble in Lagos, because with 60 million housing gap, I think what we actually need is for mortgage banks and even the commercial banks who have more firepower in terms of capitalization and funds to ensure they assist and make Nigerians owners of their houses and not remain tenants. Oh, yes. Oh, yes. You see, it is a sector where you are expected to create long-term assets. mortgage assets by their nature are long-term. That is, you are creating assets for 10, 15 years, but the funding is short-term. We don't have long-term sources of funds here in the country. And it will be a recipe for disaster to use short-term funds to fund mortgages. That will be a mismatch. And as such, that limits the role mortgage banks, not even commercial banks, can play in this. So that is an area we need to get drawn to. If we can access the funds from the pension area and all that, we need to still look at that, because basically, by their nature, insurance companies and pension funds, their liabilities are long-term. And as such, the only available assets which are long-term in nature, which are available also to are mortgage assets. They must find a way where such funds can come in through the PMIs, who are mortgage banks now, and then they can originate loans. That is the way out for us. But that is a major area, because that's one of the major challenges. Another challenge is the cost of real estate, which is influenced by the cost of lack of infrastructure. If you are coming up with new real estate, you must consider the cost of infrastructure, water, electricity, and all that. By the time you add that to the cost of the land, it really makes houses unaffordable. So that's an area the government will need to step in. But with what is happening with power, the government is coming in on power, with what is happening in Lagos in terms of infrastructure, redevelopment, and provision, rail, and all that, a lot of things we expect will soon be a thing of the past. That will make it a lot easier to reduce the cost of houses and make it more affordable for Nigerians to take loans to buy their houses.
Okay, just drawing from that as well, the interest rate was jacked up like about 5 to 6 times last year. What was the impact on mortgage, on real estate sector?
Well, real estate participants are in the same economy. If interest rate goes up, it affects all facets of the economy and all participants and activities. It makes it more unaffordable. It increases the cost element. And of course, it also makes it more unaffordable, because for mortgage banks in particular, if you are giving out a loan to a client, there's what we call loan-to-value ratio, and you have a maximum of 70%. That's what we practice, or a down payment of 30%. Certainly, if the cost is interest, if interest cost used in funding the real estate development is high, certainly the prices of the houses will be so high. If the prices of the houses are high, it may be difficult for people to come up with the 30% contribution. If they are not able to come up with it, they cannot access such mortgage loans. So interest has a lot to play in this and influences how the market plays out.
All right, so thank you very much.